joining us now at the bond report and the expectations in the bond market. Rick.
You know, the bond market's whisper number is 100,000. Now, if we see 100,000 or more, I believe that the market's going to consider that as a bit of a pushback against last month's minus 258,000 revision. And that's really what it's all about. Now, if you look at four-year chart of non-farm payrolls, you can clearly see the pattern there is lower. And the last part of the chart is the lowest part on the chart. So if the Fed's looking at that, I understand why they're concerned about the labor market. But it really is about that minus 258. We all know the numbers aren't totally accurate, but that's all we have to work with. So whether we reject or push the possibility that last month's big take back was actually happening, that's going to define whether, in my opinion, we have 25, maybe 50. If we get anything, in my opinion, less than 50,000, I think you're going to see the percentages move higher for a 50 basis point cut. Now, if you look at JOLTS, it's a little different picture on the four-year chart. Yes, it doesn't look terrific, but it's mostly sideways, and there are lower points than our current reading. Now, if you look at 2 and 10-year, and this is important, all these charts that you're going to see now are right before the big, ugly non-farm payroll last month. And you can see how we had such a huge drop. In the 2-year, we were at 396. In the 10-year, we were at 438. So since that report, mostly sideways to slightly lower. And the dollar index, our last report was before that hit. It was the last time we flirted with that big psychological level of 100. So tomorrow's report is really huge. And don't take the notion that the market's going to ignore it because they're inaccurate. That's the only thing on the table, and they are going to pay very close attention. Brian, back to you.
All right. Like to hear it. Well said.